Hey everyone, and welcome back to the channel where we dive deep into the fascinating world of hard-to-borrow stocks and potential short squeeze setups. Today, we're spotlighting a unique name that's been grabbing attention on our screeners, DSY, also known as Big Tree Cloud Holdings Limited. But before we get started, please take a moment to understand this. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's jump right into Big Tree Cloud Holdings Limited, trading under the ticker DSY. This company operates in the consumer defensive sector, specifically within household and personal products. With a market cap of $22.04 million, DSY manufactures and sells personal care products, including sanitary napkins, panty liners, and sanitary pants, under brand names like Big Tree Cloud and Yaliota. They also offer OEM and ODM services. Looking at the recent price action for DSY, it's been quite volatile. Today alone, the stock is up plus 5.59%. Over the last 5 days, DSY has surged an incredible plus 77.44%, and in the last 30 days, it's seen a remarkable plus 148.42% increase. To chart DSY 30-day performance, this kind of momentum often gets traders asking, could there be a short squeeze brewing? What is cost to borrow and why it matters? To understand that, we need to talk about cost to borrow, or CTB. When you want to short sell a stock, you first have to borrow shares from a broker. That loan isn't free. You pay an annualized fee, the cost to borrow, to hold those borrowed shares. A stock is considered hard to borrow when there are very few shares available to loan out, or when demand to borrow them is extremely high. In these situations, the cost to borrow fee can skyrocket, often exceeding 100% annually, making it incredibly expensive for short sellers to maintain their positions. This high fee acts as a strong indicator that the market for borrowing shares is very tight. Why this stock is hard to borrow right now? So, why did Big Tree Cloud Holdings Limited DSY land on our hard-to-borrow screener? The numbers speak for themselves. The current annualized cost to borrow fee for DSY stands at an eye-watering 807.3%. That's not a typo, over 800%. Highlight 807.3%. This exceptionally high fee signals extreme difficulty in finding shares to short. DSY also has a relatively small estimated float of just 1.3 million shares. When you combine a small float with such an exorbitant cost to borrow, it suggests that the supply of borrowable shares is likely constrained, even though the exact number of shares currently available to borrow is unknown. Today's volume for DSY is 658,800 shares, which is only about 0.1x its 30-day average volume of 5,781,406 shares. While the stock is up, the low relative volume today suggests the recent run-up might not be driven by massive, immediate short covering. Squeeze mechanics explained. Now let's break down the mechanics of a short squeeze. A short seller borrows shares and immediately sells them, hoping the stock price will drop so they can buy them back at a lower price, return them to the lender, and profit from the difference. But if the stock price goes up instead of down, these short sellers start losing money. If the price continues to rise, especially for a stock that's hard to borrow like DSY, the pressure intensifies. They face two choices: either continue paying those astronomical borrowing fees and endure mounting losses, or buy back the shares to cover their short position. When many short sellers are forced to buy back shares at the same time, it creates a surge in buying demand, which can push the stock price even higher, trapping more short sellers in a squeeze. Short animation, short squeeze graphic. It's important to remember, however, that a high cost to borrow, even one as high as DSY 807.3%, does not guarantee a squeeze. It can also indicate that short sellers have very strong conviction that the stock price will eventually fall, and they are willing to pay a premium to maintain their positions. Our internal composite squeeze score for DSY is 47.6 out of 100, which suggests some potential, but is far from a guaranteed squeeze play. Dilution risk check. A critical factor to consider when looking at squeeze potential is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. For a short squeeze thesis, dilution can be a killer. More shares mean less impact from short covering, and often a lower share price. For DSY, we checked for recent dilutive SEC filings like SMINUS1, SMINUS3, or 424B over the last 90 days. Fortunately, we found no recent dilutive filings for Big Tree Cloud Holdings Limited in that period, nor any recent reverse splits. This means that, based on recent filings, the existing share structure for DSY isn't facing immediate pressure from new share issuances. Once again, please keep this in mind as we continue. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you watch for with DSY, Big Tree Cloud Holdings Limited? With an 807.3% cost to borrow and a 1.3 million share float, the ingredients for a high-pressure situation for short sellers are certainly present. Key indicators to monitor would be any significant spikes in volume, especially on green days, which could signal short covering. Watch for changes in the available shares to borrow and, of course, any shifts in the cost to borrow rate. A sudden drop in CTB could mean more shares became available, easing the pressure on shorts. Conversely, if DSY price continues its upward trend while the cost to borrow remains elevated or even climbs higher, it could create further pain for those betting against the stock. Remember, today's relative volume is low at 0.1x average, so sustained high volume could be a significant development. Big Tree Cloud Holdings Limited, DSY, presents a fascinating case study in hard-to-borrow stocks highlighted by its incredibly high 807.3% cost to borrow and small float. While the recent price action has been significant, understanding the underlying dynamics of short interest and borrow fees is crucial. Whether this leads to a massive squeeze or simply reflects strong short conviction, DSY certainly offers an educational look at the forces at play in a hard-to-borrow situation. If you found this analysis helpful, please hit that like button, subscribe for more deep dives into unique market situations, and let us know in the comments what other hard-to-borrow stocks you'd like us to cover next. Thanks for watching.